So this is our next seminar of our COVID-19 series, eighth seminar, and as our today's topic is the new normal of real estate market, right? So I want you, again, I'll give my presentation first, and we'll have today again a Q&A session. Our expert panel is already here. Kishore is here, Bhavin is going to join, Gaurav is going to join, Sandeep Chopra and Harneet would be here as our legal experts. And Bani is already here as our insurance broker. And then Prasoon is already here and Mohit is already here as our financial advisors. So thank you to the expert panel to join this session. Again, a quick disclaimer, we try all our best to get the right information for you guys, but again, this is our advice only. It's not a professional advice, so please verify everything before making your decision. So here you go. Today's agenda we have is our TRREB September 2020 report. We'll discuss that, and we'll also discuss our quarterly Q3 report because we just finished third quarter of 2020. We'll then have COVID-19 short-term and long-term impact on our real estate market. And then I got a very important insight from Benjamin Tall, which is Deputy Chief Economist from CIBC. So I'll discuss that. And then we will discuss the rentals and the condo market, which there's some fear in the market. So we'll discuss and try to address that fear. And then we'll establish what is going to be the new normal of the real estate market. And then we'll have our Q&A session. So here it is. This is our Toronto Real Estate Board report from January till September 2020. As you could see, we started with a bang of about 5,000 sales in January, and then February, March was great. And then we had that slow down. But boy, oh boy, what can I say about the sales in the last 3 months? We are hitting highest ever number of sales every month, and we are beating the record every time. So right now we are sitting at 11,083 sales in the month of September, which is a record for September ever, right? We have again a short supply of the listings. We have about 18,000 number of listings, which is better than last couple of months, but we are still only at about 1.6 months of inventory. So as you all know by now that months of inventory play a very, very important role. So which means lower the supply, more the demand, the prices goes up, and that's what's happening. So the average sale price, as you could see, has increased to now 961,000. This is the highest ever average sale price for Toronto. So we have beaten all the records for average sale price in Toronto ever, or Toronto Real Estate Board. So now if we look into our this September report versus September last year, we have sold 11,000 homes this year as compared to about 8,000 homes in 2019. So which is a whopping 42% increase in the number of sales. Unprecedented. That's the only word I can think. And if we look into the pricing, we are sitting at 961,000 average sale price. As I mentioned already, it's the record. We are 14% higher than 2019. So again, unprecedented, great numbers, very strong market. Everybody would agree to that, right? And now if I look into the total number of sales, this is a very interesting slide. Last year, from January to September in 2019, we sold 68,243 homes. This year, from January to September in 2020, we have already sold 69,000. So we are 1.2% more than last year, which means we have already erased all the losses for COVID-19 during the month of April, May, or June, which we had lost some number of sales, but we have already overcome that and we are stronger than ever, right? So this is again a very interesting and important slide showing the quarterly reports for each quarter. So we started again with strong Q1. We had about 20,000 sales in Q1 with about 884,000 average sale price. Then COVID hit in April. So we came down from like 20,000 to only 16,000 number of sales in Q2. Keep in mind, Q2 is a spring market, which always has to be the strongest part of the year. So we always have best number of sales in Q2. We normally should have about, I would say, around 30,000 sales, but we came down to only 16,000 sales. So we only sold roughly about, I would say, 50 to 60% number of homes in Q2, and average sale price dropped, which should always go up, but we dropped to 872. Now, Q3, a very different story. We have already sold 33,000 roughly number of homes in Q3, which is again a record for Q3. We have 102% increase, which means we doubled. We sold more than double the number of homes in Q3 as compared to Q2. Never ever happened in the history. Again, we have the reasons because Q2 was very weak, and Q3 has been much stronger even than what we expected. And the average sale price, if you see now, we jumped from 872 to 952. So we have already gone way past our Q1 pricing. So we are sitting at 952,000 average sale price, which is a 9.2% increase for quarterly growth. So as compared to Q2, we have about 9% more pricing as in Q3. That's the average home price for the whole quarter for Q3. So this is showing you the number of sales for the month of September, or actually it's for month over month. So if blue line represents 2020, if we look in the 2020 graph, we started with good numbers. We came down during April, May, and then June we started the recovery, and now we are sitting at, again, as I said, the highest ever number of sales for September of any year. So never ever we had more than this number of sales in the month of September, right? And again, the price, what can I say about the pricing? We are again beating the record every month, and for the last 2 months in a row, we are beating the previous highest ever sale price records, and we are sitting at 961,000, which is again a record. Why all this happening is, as I already mentioned, this is because of the low inventory. We only have about 1.6 months of inventory in the market. So low inventory means more demand, which means more pricing, and that's what's happening. So we only had about 18,000 number of units in the market in the month of September, and we sold 11,000. So if we divide 18,000 by 11,000, we have 1.64 months of inventory. So that's what's happening right now. So overall, we have a very, very strong market. And as you all know, the most strong market is the detached. Even the best market this month was the detached houses in 905, which means out of Toronto. If you go to, people are buying houses now everywhere, up north, up east, or west, far east, far west. People are going far away from 416 or GTA in search for bigger homes within their price range. That's why 905 has seen the highest growth in the number of sales as well as the pricing. So the pricing has gone up 14%, and sales went up by 63% in 905 area. Also, condos, there is a big fear in the market, and there is a perception, which is true to some extent, that the condo market is struggling. Yes, it is struggling, but it doesn't tell the whole story. Condo market is still a strong market if we compare September this year versus September last year. GTA condos are 15% more number of sales this year as compared to last year, September. Prices are 7% higher this year as compared to last year. So it's not a bad news. It's still a good news, right? I know we had a very, very strong February and March where we went up way up because we had zero inventory. We almost had like 6.7 months of inventory, less than 1 month. And we were selling condos like crazy. And that was not the right market, to be honest, because the way it was growing, it was going to cause problems. It has actually caused a good correction, and we are still having now good inventory. It's about 4 months of inventory in condos, which is a good sign, and people can buy condos at the without any fear of multiples, and they can take their own time. So 905 condos again have seen a big trend, 32% higher. People are now trying to buy bigger units. They're going away from downtown core because they don't have to go to work every day. So they can live away from downtown in search for a bigger units. And that's what's happening in 905. So sales are up 32% and prices are up 8% in 905 area. So that's again a big news. Now, Toronto still holding very strong in 416 as well. So although we are saying people are moving out of Toronto, we still have 7% more sales this year in Toronto as compared to last year, and 7.7% increase in Toronto this year as compared to last year for condos, right? So not a very bad news. So it's still a good news for condos. So now, what's the overall impact for COVID so far? So what's the background and what's the current situation where we sit right now? So these are some of the fundamental truths about life. Time is limited. As we all say, time is the new currency. You cannot replenish time. It's very much limited. People want to be safe. They need to be safe and want to be safe. And that's what it showed when COVID hit. People were again went into a passive mode. They didn't want to go out. They didn't want to meet. And people still are social. It's a fact, right? We want to meet people. We cannot live isolated forever. Canada and Toronto are destinations for those from the developing world. So people still want to come to Toronto and Canada. And especially after COVID, more and more people would like to come to Canada and Toronto. That's another fundamental truth. Leisure time and activities are valued more than work time and activities. Let's be honest. Everybody want to work, right? Wrong. We want to work because we have to work, right? But everybody wants to have leisure time and activities. So definitely it will come back. We all know that, right? We want to go to movies. We want to go to big events. We want to go to watch games, right? So we want to go there. Technology will increase people to work from anywhere. So which means right now we have invented that we can work from home. We can do all these events. We are doing this event from now, this is our eighth event, and we are doing these events. Everybody sitting at their home, and we are still connected, and we are doing these events. Similarly, you working from home, but you're still producing, and employers also understood that their employee can work from home. So technology has given us a new way of working. And lastly, but most importantly, land is limited. Location, location, location. So we would again come back to that scenario again. You cannot replenish or replace or make more land. Now, what does this mean in short term? In short term, the sellers and the buyers, they are trying to move away from downtown core. So people are going towards 905 in search of bigger homes or bigger units. Weakness in the rental market, particularly into downtown Toronto sector. That's again a short term. It's not going to be forever, but yes, there is a weakness and it will remain there for some more time. Possible increase in power of sales, foreclosures, or sales due to financial distress and family changes. So let's be honest, there would be many jobs lost in some sectors, and there would be some financial distress in those sectors, and there would some people would have to lose their houses. So that will be in short term. Also, restaurants and tourism and gyms and the events and those recreational things and the leisure, these all are on hold at this moment. So there is a weakness in this activity. Historically, we are sitting at the lowest ever interest rate, right? This is unprecedented what interest rates we are getting. It's not going to be there forever. This is also short term. And then government is trying to bridge the gap till the vaccine is invented. They are pumping money. They're trying to keep people calm, and they're trying to keep people in the market. So this bridging programs will continue for short term till the time vaccine is invented, and vaccine would be available in the developed world first, right? So countries like Europe, Canada, US will always get the vaccine before the developing world gets it. So that's another fact. And short term, we would have vaccine, maybe less than a year, we would have this, right? In long term, which means over a year, more than a year, this 905 rush, what's happening? People are moving from Toronto to say Orangeville, or moving to say Barrie, or to say Hamilton, or going towards uh, East Bowmanville or Oshawa or other parts of the like faraway towns from GTA. That 905 push or pull will stop. Everybody would like to return back to Toronto. International students will come back to city. The international students come to Toronto not only for studies. That's one part, right? They come for a lot of other things. They come for experience. They come for North American lifestyle. They want to be American. They want to become Canadian. So they will come back. They cannot study offshore forever. Large events will also return. So all these entertainment will come back, cultural things will come back, sports things will come back, with the weddings will start happening. So everything will come back in long term. More than a year, roughly, we would have these new normals back. Long-term real estate is going to be a great investment in GTA, because population will grow, household will grow. There will be more houses, there will be more people in GTA. So it will come back with a bang. Interest rates and the mortgages will go back to normal levels, because whatever is interest rates now, take advantage of that. It's not going to be there forever. So it will go up. Now, also in long term, we'll have to also vaccinate developing world, because developed world, as I said, Europe, America, or other developed countries will get first, but then developing world will also get vaccinated so as to eradicate this COVID. And ultimately, people will forget COVID. And then people will again start focusing on other events. Like they will start thinking of carbon footprints. They will start thinking of, again, major concerns for Canadians would be other concerns like economy or maybe jobs, rather than COVID. So COVID concerns will stop, will forget. Let's be honest, human beings have very short memory. So once we are out of COVID-19, people will forget in next couple of years, 2, 3 years, and then no, it will be a thing of the past. So that's long term. Right. So second wave is already here. We know that we are already living second wave. We are still wearing masks. We are keeping social distance. We are not hugging and meeting people like we used to, right? And we still have fears and concerns. And you know what? Don't forget, media loves fear. Media loves to create concerns, because these concerns and these fears stop people from whatever they are doing. Fear freezes us and stops us from moving forward. That's why media loves and create fear, and they want to have those headlines so that people are glued to the TV or to the media, and they can sell their advertisement, right? So as the great FDR once said, biggest threat is fear. That's right. The only thing we have to fear is the fear itself. So they want to create fear. They want to create this perception that market is going to come die. Unfortunately, we have this CMSC headline, which has been brought up a few times to create a fear. It's now a very unfamous quote from Evan Siddle, the CMHC CEO that we would have a 9 to 18% drop this year, which has been already debunked. But these type of news will keep on coming. There are people, there was a reporter, Garth Turner. He used to say every year that this is a bubble, this is a bubble, this is a bubble, and it will burst, it will burst, it will burst, right? So the people like Garth Turner are they're right once every probably 8 to 10 years. So after 8 to 10 years, there's always a correction. Then they can say, hey, see, I told you it will come down. But they don't tell you, or we don't realize sometimes they're saying it forever, right? Uh, After 8, 10 years, when the market has more than doubled, if it comes down to 5, 10, 15%, it's not a bubble, right? Even a broken clock is right twice a day. So don't believe them. So the strength due to COVID has also created a lot of strength in the market. It has created low interest rates right now, which is a very good strength. It has also created a desire for bigger living spaces, technology to work remotely. It has transformed physical sale or retail to online retail. As you know, big box stores and all the malls are struggling, whereas online shopping is through the roof. Amazon or other online shopping websites have seen unprecedented growth, right? People prefer virtual and easy transactions now. Majority want to get out of the house. Still, despite it, everybody wants to go out. Remember, they opened up Niagara Falls and there was so much rush. They opened up beaches, there was so much rush. People want to be out. Employers have realized that virtual employees can be efficient. That's another strength of COVID, right? So it's going to stay. Now, also, keep in mind, it doesn't rain everywhere. When certain segments of the market suffer, like say entertainment industry suffering, like hotel industry suffering, airline industry suffering, there are many industries which are yes suffering this, but there are also many industries like, as I said, Amazon or online shopping is growing very, very fast. There are also restaurants have changed their style, like takeout business have gone through the roof, and that also increased the profit margin for these restaurants, right? So it's not bad, it's not gloomy everywhere. So don't worry, there are more strengths of this COVID. New jobs are being created, new businesses are being opened. As I said, these free delivery services, pre-cooked meals, home office setups. So these type of businesses have grown exponentially. They have created a new market. And then there are recreational things which has also, like, people are buying sea-doos, people are buying boats, people are buying snowmobiles. So these type of equipments are on sale way more than ever. Also, COVID has also created more divorces. The divorce rate in Canada has gone up, or will go up, to 38% this year, which is a bad news, right? It's unfortunate, but it's also good news for many therapists, for lawyers, for many other professionals. When there's a divorce, there's also more real estate transactions. People sell their homes and then they buy separate homes. So it will create more business as well. Unfortunately, that's truth. Also, the marriages which were on hold for a long time, they started last couple of months. They are again going to be on hold now because of this new second wave. But marriages are going to happen, and they are happening. And then when marriages happen, people want to buy homes. So that create more demand for homes, right? So ultimately, now let's speak about Benjamin. As I said, Benjamin Tall, he's a CIBC Deputy Chief Economist. On September 16th, he gave this insight in Canadian Apartment Investment Conference. So he mentioned that the next 6 months will be more difficult economically than the past quarter. But the Canadian housing market is expected to continue its V-shaped recovery. So which means we may have some drops in next few months, but it will come back strong again, as per Mr. Tall. Also, these are the facts which Mr. Tal he presented. He said during this time, the government has already distributed $56 billion in the aid programs. And you know how much money we lost in terms of wages? Only 23 billion, which means government has put more money in people's pocket than they have lost. On net, household disposable income has spiked 11% in Canada in this COVID-19 period. So which means COVID-19 has given bonus to people. People are struggling everywhere else, but in Canada, people have more disposable income, more uh, money to spend, and that's why affordability has gone up. People are not spending this money on vacations, on recreational things, or on other things. They are only having this money, so they are able to spend more money to buy homes, right? So that's what's happening, and that's what's causing all this boost in the house pricing as well. Another factors which are impacting the high price or the growth in real estate, as per Mr. Tall, is the low interest rates and strong pent-up demand. 80% job loss which has happened in the service sector, which are primarily renters, which means, yes, tenants are less out in the market. They don't have enough money to pay for the rents. That's why the rental market is down, right? But home ownership has increased. Actually, people are now, Canadians have better opportunity than before because their jobs are still there. People, normally the people who buy homes, their jobs hasn't been impacted that much. Their jobs are still there, their income is still there, and the interest rates are in the basement. So interest rates are the lowest ever. So that's why this is the most better opportunity for Canadians to get into the real estate market than ever. That's why our market is booming, as per Mr. Tall as well. Also, low-rise housing market will be fine. So he's saying, don't worry about these condos, they will be fine, right? So there is demand for low-price condos, and they will appeal to investors and users both. Luxury condos may have some slow like recovery. So there could be a trouble for luxury condominiums, but these small condos or these low end priced condominiums, they will be doing very well as per Mr. Tall. The real estate market will stabilize at the current levels versus the huge increases we have seen in the last few years. Now, coming back to more positive factors, as per Mr. Tall, 160,000 new immigrants are already here. You know what? We expect to get about 350,000 Canadians every year to Canada, right? But you may not have realized, or we may not have realized, 160,000 have already come this year. 3.5 million Canadians live abroad. Most of them live in US, right? And they want to come back to Canada. You know, during this hard geopolitical time, there's more COVID concerns in US than in Canada. People want to come back. Also, uh, there was this debate, or the presidential debate, which happened about a couple of weeks back. You know, what was most Google thing at that time? It was people were trying to Google, or US citizens or US Americans were trying to Google how to immigrate to Canada. That was number one Google search during the debate. So imagine, people want to come to Canada, right? Then 400,000 Canadians who live in Hong Kong because of turmoil or because of the problems in Hong Kong, 90,000 have already returned, and more will come back. 100,000 Canadians go to US every year, but it would not happen this year. People would not go to US that many. So those people who do not go to US, they don't leave Canada, they are not selling their houses. So they are not creating more supply. So there's more demand, less supply, as per Mr. Tall. Also, Mr. Tall uh, gave some predictions into the rental market. He said the rental market will remain soft for 6 months. So we all agree, because of this COVID situation, people don't want to go to downtown. People don't want to go into condominiums. They don't like to share spaces. So that's why condominiums or the rental markets will be low, right? Because people are ready to move out and go far away from town. So that's why rental market will be low. And this is also because of the increased supply and less demand. We all know that. Also, another factor adding to it is that young adults, which normally move out from their parents' houses or basements and go and live at their own, they are now staying longer at home. Or some of them have actually moved back to their homes from in the parents' house or basements rather than living in independently. So that's why there is more supply and less demand. Now, there is another study done by TorontoRental.com and Bullpen Consulting. So this, as per their study, residential rent in the GTA has declined to 2,194 in July this year as compared to July last year, which is 8.7% down. So it's roughly 9% down in rental market. So that's why we normally say we're about 10% lower in rental market. Condos have lost about $260 per month this year as compared to last year. Single family homes have also gone down about $350 per month. Whereas the rental apartments, now when I said rental apartments, these are not condominiums. These are those buildings which are made primarily only as rental buildings. They are not condominiums. Actually, their rent has gone up $35 more this year as compared to last year. So which means they have not lost in rent because they were never too high. Now the rent drop, where is the maximum drop happening? Most drop is happening again in Toronto. East York has dropped 16%. North York has dropped 12%. Oakville and Toronto has dropped 11%, and Mississauga has dropped 10% rent this year as compared to last year. Downtown has lost its sizzle. People are not going to downtown. They are not going to the work where the office towers are. That's why they're working from home, and that's why the rental market has dropped downtown a lot. But Bullpen President Ben Myers said it's short term. People will come back to downtown where the action is, because people don't live in downtown only for work. They also live in downtown for many, many more things, for entertainment, for restaurants, for enjoyment, for having good time. So youngsters don't want to live way far out. They want to live downtown. So they will come back. So don't worry. Now, these are opportunities in when there is this fear in the market, especially for condo market, that also create opportunities for condos. You know what? In Toronto, we have the fastest growth in Toronto in the world. This is the fastest growing city in the world. We get roughly about 150,000 new immigrants in GTA alone every year, right? Which needs about 50 to 40 to 50,000 new homes being built every year, right? But we are only making about like 30 to 40,000. So we are making 10,000 to 20,000 lesser homes. So this condo rentals will come back, right? So don't worry about that. This will go back. Now, the fear which has created, which has stopped Airbnb activity completely in downtown areas. And that's why Airbnb units are come back into either long-term rentals or they have come back into sale. And that has increased the supply. So they will again go back to normal when this fear factor is taken out. Rental rates are down, but that's a reality. We need to live still downtown. The need is there. And you know what? We pay too much attention to prices. We do not pay attention to interest rates, which is, I believe, if not more important, it's equally important. You know why? If we look into interest rates, right now we're sitting about 1.7, 1.8%, or 1.9% interest rate as compared to 3.5% normal interest rates. Average 480,000 mortgage at 3.5% interest rate was about $2,400 per month. With this new normal, average that same 480,000 mortgage at 1.85% interest rates is about $2,000 per month, which means we are saving $400 per month in mortgage every month. So even if the rents have dropped $200, $300, it actually puts more money in your pocket. So it's not a bad news. It's still a very good news. Let's look into now the population by generation type. Our main population of Canada, or main buyers who buy homes, which are our main buyer segment or the rental segment, are these last two segments. They are called millennials or Gen Z. Millennials are people born after 1981 to 1996, and Gen Z are born after 97 onward. So most people who buy and rent are millennials, and few Gen Z come in there as well. In Canada, together, they are about 51% of people. And you know what? You know how these people look like? What are these people? This is how they look like. These are today's buyers. These are today's renters. This young demographic will always want to live in urban areas, especially downtown. Would you expect them to live in Orangeville or in Hamilton or in Bowmanville or in Hamilton? No, they will come back to downtown Toronto. They cannot live isolated. They want to work, play, eat, socialize. Then that's why they want to go to downtown. So that's our new Gen Z. And this is our international and Gen Z students. You know, parents don't send their kids to Canada only for studies, as I said. They come here for that North American lifestyle. They want their kids to rub their shoulders with other North American kids. These kids want to learn the language. They want to learn the North American lifestyle. They cannot and they don't want to study only online. They want to come and experience Toronto lifestyle, and they would again occupy all universities, all vacant units downtown. So this will be again taken over by these type of international and Gen Z students, including with our new buyers and our millennials. So don't worry about what's happening there. Now, what's the new normal for our real estate market now? The real estate market is strong. It will remain strong. It's not going to go anywhere. It's a short-term blip in some segments of the market. As I normally say, we are living three segments in the real estate market. One is a condo segment, which is weak. One is our high-end home segment, which is also weak at this moment. And then is our homes under $1 million mark. That's what normally we call like the first-time buyer homes, which are very, very, very strong. COVID-19 isn't causing panic in real estate. So that has been established. People have started to realize that COVID-19 is not going to change the house prices. So that's why now people are not going to be worried with the second wave, because initially we were thinking when the second wave will come, the prices will plummet. It didn't happen, and it may not happen because people have realized they have found ways to live with COVID, and they have now adapted to with COVID, and they have made appropriate adjustments, and now they are still buying homes during this COVID second wave as well. Move up buyers from condos to houses should not wait. You know what? I warned you once, I warned you twice, and I'm warning you third time. Anybody who need to sell their condo to buy a house should not wait. The house prices, especially in GTA, again, I'm not talking about way far out, but especially in GTA, do not wait too much. They will not come down. Land, you cannot rebuild more. You know what? If you felt that you lost an opportunity to buy a house in 2007 or 2008, sorry, during the financial meltdown, or in 2017, when we had a drop in our Toronto real estate market, and you are missing that opportunity, this is your again the opportunity. Despite the low rents, condo prices has been resilient. So if you lost that opportunity to invest into real estate market, especially condo market in 2008 or 2017, condo market is on sale now. And as Warren Buffett very famously said, people, when people are greedy, or sorry, you should be greedy when people are fearful. So that means when the sales are happening, we should be buying, not worried. So again, never wait for the absolute bottom. No one knows. So the market in condo sector is on sale. Take advantage of that. Low inventory, low rates, and market confidence is likely to boost sales and prices throughout fall. So our fall market will remain strong. And what is going to lead? This is our Toronto's realities and opportunities. Toronto, as I said, is the fastest growing city in North America. We have about 150,000 new legal immigrants come to Canada every year. On top of that, we have 30 to 40,000 refugees which come to Canada or to GTA every year. And then there are many undocumented immigrants who live here. And then we get those international students. Adding all of them, there's a huge need, huge demand, little supply. And that's what has caused in the last about 45 years from 1973 to 2019, our average home sale price has appreciated at the rate of 6.6% per annum per year. You know, this growth is not going to stop. It may slow down, but it's not going to stop. Even if half the growth happens, even it grows at 3% per annum, our average home price in 30 years from now in 2050 would be 2 million. And if it grows at a modest rate of 5%, which is still not 6.6%, which has happened in the last almost 45 years, even it grows at 5%, a conservative number, our average home price in 2050 will be 3.5 million. So don't wait. This is an opportunity. Don't let it go. Future of Toronto Real Estate Board is limitless. This is a road to the financial freedom. So Canadian real estate investment is the best investment. It gives you the maximum leverage opportunities and financial freedom. So don't worry, go for it. Again, to understand more about all this new market or new real estate market in Toronto, and to understand your particular situation, please book your one-to-one meeting with either me or Neelam or Mac. And please let us analyze your situation, and we'll try our best to give you the best possible advice. Thank you, everybody. And now I'll open the floor to our Q&A sessions, which our experts will now come back and they will answer all the questions. So thank you, everybody. Thank you for your time again. So now let's open the floor. Anybody have any questions, please feel free and ask the questions.
Yes, I'll kick it off. It's Mohit.
Hi, Mohit.
Okay. You had mentioned about the power of sales or foreclosure numbers might spike up later on.
Yes.
Is there any government organization or any real estate board which sort of gives you that data year over year or month over month as to where this is trending? Because I think that would be a good indicator per se to know where the market is heading.
Yeah, very good question, Mohit. Thank you for asking this question. Again, there are data available. It's mostly based on the economic data, that how many people are losing their jobs, right? If we look into the job market, that gives you an indication. There is still some concerns in the job market, especially in those industries, as we understand, which are suffering a lot, like entertainment industry or hotel industry or airline industry or food industry or many other industries, right? So all that business which are losing, those people would ultimately may have to go into this financial distress that can create this out of sales. But because this is unprecedented, right? This is not happening because of whatever is a normal data from the previous years. This is all happening because of these last 6 months of COVID activities. So yes, there are government data available. They are trying to track it. That's where Mr. Tall from CIBC, he has mentioned that there are concerns. They have, CMHC is creating that database, and CMHC has actually released another database about last week. Again, some information is available, which we can, again, I know you being a financial analyst, you can analyze and read and understand that report much better than even us, right? So I'll try to share that with you and take your insight and then maybe share with other people as well.
Okay, thank you.
Thank you. Anybody else?
Yeah, Sam, I have a question.
Hi, Nishpaksh. Yes.
Sam, as per the report you gave, like everything is going good. The market is very strong and people are buying and all is good in the houses part. But then why is the days on the market increasing? It was in your report. If you see the trend, it's kind of increasing. Now it is in 20s, which was earlier in like maybe like I think
15.
15, 13 days, something like that. Yeah. Why
15.
is that increasing now?
Yes, there are two factors. If you also look into the number of listings in the market has also increased a little bit, right? Last 2 months, when the days in the market was about 15, 16, 17, whatever, the number of listings were about 1.4 month of inventory, right? Then increased to 1.5 months of inventory. So when there's a little bit more supply, right? And then it went to now 1.6 months of inventory, because the inventory is increasing at the same rate as the demand is. And actually, it may be increasing a little bit more than the demand side. That's why number of days has gone up a little bit. But this is still a very, very strong seller's market. The reason I'm smiling is we are questioning why it's taking about 22 days to sell a house. Nishpaksh, what is a normal real estate market? I remember like 5 years back or 10 years back, we used to tell a seller, your house should be sold within about 60 days, average. So average sale was used to be between 30 to 60 days, 40, 50, 60 days was average. Now we are sitting at an average of 22 days, which is half the normal average. And we are questioning it, which is again because we have set up new normals and we feel, hey, this is again small changes, small tweaks will keep on happening. Also, we are approaching the slowest time of the year. If we compare September of this year versus September of last year, our average days are less, right? October is going to follow the similar trend. November, December, it will increase the number of days. So that's what's happening. Any other person? Any other question? Nishpaksh, do you have any more questions?
No, Sam, I'm good. Thank you.
Thank you.
Thanks for the information.
Thank you. Yes. Anybody else? Any other questions? I know Harneet is already here. He's our legal expert. And so if anybody has any questions for Harneet or for Sandeep, he's also here, our legal expert. So any other legal lawyers related questions are here, or mortgage brokers are here. So as you know, Kishore is already here. And so anybody has any.
Is there any accounts person here?
Yes, we do have two. We have Mohit and we also have Prasoon. So
I was just wanting to understand. I know in property, outside person can invest, but a non-resident Canadian can invest in beside properties, which are the other areas. No, I know it will be anti your area. Like we have already invested with you. I mean to say in a property.
That's right.
Yeah? And we are very happy with you because I think we had now 3-4 deals with you of rent and as well as buying a property also.
Thank you, Indraji. Yeah, no, thank you, Indraji. And again, Mohit, do you want to take this, or
Sure.
either you can take it, please?
Yeah, I can start it off. I think real estate forms an important piece of that big asset, their chart. So real estate is one of them. You can add your stocks, which is having ownership in public businesses. You can add bonds.
So as a non-resident, I think I cannot invest in stocks.
Which country are you resident of?
Sorry,
Which country are you resident of?
Canada.
So
I am a Canadian, but
oh,
I
you
am living outside.
oh no, depending on which country you're in, you could still invest. Like
I am in,
I have clients who are citizens of the UK and US, around the world. Depending on how compliance works, if we have the clearance, an individual could invest, have accounts with us over here.
You know what? Why don't you guys, Indraji, I'll share with you Mohit's number, and
okay.
Prasun can also guide you in the same topic. I can share Prasun's and Mohit's number with you, and you can definitely, they will be happy to answer your questions and help you to understand that aspect as well.
Okay, right.
Thank you. Any questions for Bhavin or Kishore or Gaurav, our mortgage brokers? Anybody? Or Bani is also here, which is our insurance broker. So anybody having any insurance related questions? And I'm always there for you. You know what? I feel as the days are passing, or as these seminars are happening, I believe I'm trying to do a better job because the questions are lesser and lesser. So maybe I'm either giving all the information so that there's no questions left, or people, or I'm maybe too lengthy and people are saying, you know what, enough is enough. Let's not ask any more questions. So anybody, any questions, please feel free.
Sam, I'll ask you another one.
Sure, Mohit.
Generally, when you buy pre-construction condos or invest in them, this is my understanding that if the condo is maybe getting ready, say in 2-3 years, and when the builder is selling you today, they're selling you with the price which will be of that condo when it's ready in 2-3 years.
Mhm.
So if you were to get into it now, you probably would get a better deal of buying a pre-existing, condo which is already done.
Mhm.
Are builders still following the same similar strategy, if that was true, of them selling which is expensive in today's market? Or are they other prices? Are they giving you some discounts or
You
easier
know what,
payment?
new construction, you're right. The new construction is always priced at a much higher rate than the current inventory, right? Uh, there are few reasons for that. One, yes, they also understand that they are not giving you the product today. It will be in, say, 3 to 4 years, and the pricing will be definitely much higher than today. That's what they anticipate. And they want to take some piece of that pie as well. So they don't want to give you today's price. They want to give you pricing, which is not the pricing 3 years down the line, maybe a year down the line for the resale. But there are some builders who are giving units around the similar pricing as of today as well. So that has started happening with some builders. But builders' hands are also tight. The cost of construction has gone through the roof. With the new pricing of lumber, which is almost 300% higher. Again, don't quote me, but that's what I heard, that lumber is 300% more. Steel is much higher.
Yeah.
And the land is much, much, much higher than before. So with all those things, the new construction cost has gone up to the roof. Builder cannot make the condominiums at a much cheaper price. I asked the same question which you asked me to a developer recently when they launched, and there was a tower release called Festival Tower in near Highway 7 and 400. I did ask the question to the developer there. I said, are you going to give some better deals here? So he said, Sam, our cost of construction even doesn't allow us to go much below than this pricing, because we also are in the business to make money. If we go much below this, we would lose money. And they also have to keep in the mind the down the line, after 2 to 3 years, when the construction is on the full pace, the cost of living will be also much higher. The inflation will be much higher. So that's the reason. I remember when condos used to be at $300 per square feet, and then they went to $500 per square feet, and then they went to $1,000 per square feet, right? People when always question, is it the like peak? There's no more room. No one is going to buy a condominium $1,000 per square feet. Everybody thought that, right? And when $1,000 was selling like hotcake, then people went up to, like, currently average price for condominium is sitting around $1,200 per square feet. And I have seen condos sold at $1,800 per square feet in Yorkville, right? So which means the sky is the limit. Doesn't matter what price you buy at, as long as we have done the research, we know what you're buying. And if you take the right advice from the right realtor, of course, hopefully you come to our team and we will give you the right advice, our best, and we'll tell you at what location, at what builder, what is the right price, right? And if you invest with that pricing, you'll be okay. Yes, opportunities wise, there are better opportunities in resale than in new construction at this moment. And I'm telling that to everybody, that this is a very, very good time to invest in real estate, especially in condo market, and you can pick up deals. Because condos, we are sitting at 4 months of inventory, or even more than 4 months of inventory in some areas. When the inventory, the same thing applies. When the inventory is so high, demand is so low, people are ready to give out deals. All right, so, and that's not going to be forever. I hope I answered your questions, Mohit.
You did, thank you.
Yeah, thank you.
So Sam, this is Prasoon here.
Hi, Prasunji. Yes.
Okay, so I have just a quick question, is that I know you have been specializing in all sorts of real estate. So what do you suggest, like going for a resale purchase for the condo or the new builder purchase?
Prasunji, as I was just mentioning the same factor, the new construction is always a good investment, especially for those investors who do not have ability to close in near future, right? It depends upon everybody's personal situation. If somebody is buying their first investment property and they do not have any other investment property, and they are in a situation where they can easily close a transaction next 3 months, right? I would suggest them in current market, let's look into the resale market and buy a resale unit. Keep it for next 5 years. Do not buy for 1 or 2 years. Real estate is not for short term. For short term, I would say connect you, Prasoon, and buy stocks, or connect with Mohit and buy stocks, or buy other things which can be like utilized in short term. Short term investment, we always say real estate is not short term investment. If someone is in a position to buy and hold for next 5 years, let's buy a resale. But if someone is in a situation where today they say, you know what, I have some money, but I don't have enough 20% down payment to buy a condominium, but I can get that money in next year or 2 or even 3 years, because right now builders are giving great incentives for deposit structure. You only have to pay normally, some builders are giving only 5% paid this year, 5% next year, 5% the year after, 5% the year after. So only pay 5% per year, which easily can be saved over time, right? For those type of clients, resale, new construction is a good investment. So this,
So even at the time of the closing, like, I mean, what I have experienced also, it's hard to get the closing done. And then you try to get away from the things, and then the cost of holding that investment, the cost of selling that property, it's so huge that you end up pocketing not much of a money in your, things. And definitely you said that the short-term investment, and I was reviewing one of my clients' portfolio just yesterday, and I see YTD was 62% year to date, right? So I mean, definitely a real estate for longer term. But even if we could pocket like 20% in 3 years, I would say that 10% each year, because the cost of buying property and selling property is huge versus our portfolios, which we suggest to the clients, right? So that's definitely a point of consideration, that when somebody is buying a property 2 years or 3 years even down the lane, is he able to close that?
You know what? Another factor I always tell people is, do not completely rely on a fact that I just want to buy and sell it before closing. You should be able to close a transaction to make money. Because if you're not able to close the transaction, then there's a pressure sale.
Yeah.
Right. And pressure sale is not good, even for stocks, even for real estate, for anything. It shouldn't be a pressure sale. As long as you buy something and you're able to close either now in next 3 months, then let's buy a resale. Or if you're able to close, I still said you should be able to close. I do not recommend that only buys hoping that I would be able to sell it before closing. And if that has to be done, then you could be in trouble. Because at that point of time, at that situation, depends where the market is at that particular location. How many units are there? How many buildings are completed in the same period at the same location? Because there are many factors that come into play, right? So yes, if you are able to close any transaction, you're able to close and keep it for next 2, 3, 4 years. If you buy something now from a builder, it will be closing in say 3 years from now or 4 years from now. That time appreciation of 3 to 4 years will always be there. But then you should be able to close it and hold it for at least 1 more year, because that's mandatory to take advantage of the HST rebate, right?
Yeah.
So that will take you to roughly about 5 years. So that's what I tell people. You need to give 5 years for your investment to grow, and you should be able to close. Then if you sell, many costs which are involved in between are taken out. Now it's a simple real estate transaction for buying and selling, and then you will make much better return on the investment. I hope I was able to answer your question.
You definitely answered, but I never had a good experience from real estate.
Again, Prasunji, let's think this way. Yes, you had that, I know what example we are quoting. Touchwood, A, you did not lose money. You still made some money, a little money, not huge money, but you made some money. B, you also
it's
have...
not that platform we should discuss that, sorry.
No, I'm trying to tell is there is still appreciations, right? You didn't make money, but the person who bought from you would make money. Someone will make money. The portfolio has grown up. It's the same thing. Sometimes stocks, we have to undersell, right? Again, you're right. It's a situation for every person is different. And we can again discuss that some other day together and see what is best for your investment. But in long term, I would always say you should be able to buy and close.
Yeah.
That's my take on the real estate.
That has always been a challenge.
Yes.
To close the
That's
deal.
why, you know what, Kishore is here and Bhavin is here to help us to go through those challenges. Any other questions, Prasunji?
No, it's all right. Like, I mean, the way real estate market is going, it looks scary, actually.
As I said, it does look scary, but it's 3 segments. If you're looking into the houses, yes, they're growing, but it's not that they're growing completely out of proportion. Some segment, especially the lower segment, is appreciating too fast as compared to the bigger segment. So bigger segment is not appreciating at all in freehold as well. And condos are not appreciating, as we know. So yes,
Yeah.
there are
No,
opportunities.
I was talking to my client, and then he said, I have like participated in a lot of transaction, but it was outbid. Like, I mean, the listing price is 750 and going like more than $800,000. I don't know how the bank is treating that transaction, that the client has to pay more. You know what I mean? Bank has to reassess the value of the property, and then after they have to approve the mortgage. There are so many things actually. The client is scared these days.
Maybe Kishore or Bhavin can answer this question. How the banks, Kishore or Bhavin, any one of you will jump in and tell how the banks treat when we get these multiple offers and we buy a house listed for 750, but we buy it for say 800 or even 850.
All right, I'll take this. So as long as there's comparables in the areas to support the value, I've had zero challenges with appraisals, right? A lot of the times, even when you think let's say you set the bar for the highest in the street, just give it 2 weeks, another sale transpires and you've set the new normal, right? And the appraiser has a comparable to support the value you bought it for,
Yeah.
right? So it's sometimes, people get scared that, oh my God, I'm bidding the highest in the street, but it's just a function of time, right? If it takes 90 days to close, and if I order the appraisal in a month, in that month, 2 other sales have transpired in the street, and the price that you bought it has become the normal.
Yep. Great.
Yeah.
Yep, that's what's happening.
Yeah, I would agree with what Kishore is saying. So currently, banks, we are not having any issues with the appraisal side of it. And again, agree to Kishore saying that, yes, you bought 800, maybe the next day someone is selling for 810 or 820. So it justifies the value at this point. Now, I would also agree to the fact that, again, stock market versus houses. Stock markets can fall in a day for 1,000 points, but houses are not going to fall 1,000 points on a day. So it would have a good catching point for a lot of people. And I also have real estate, and no, at this point, appraisal is not an issue at the bank side.
And I'll also add to the same thing. I have bought many houses for my clients in multiple offers recently, right? And Kishore knows that, and Bhavin knows that. They have done many mortgages for my clients, and none had any issues. And I've also sold my listings in multiple offers. And actually, the listing which I sold 3-4 months back in multiple offers, if I have to resell the same property today, I could have sold it for more. So yes, your client who was outbid in multiple offers, if he wait another 3 months, he would be paying even more.
I think I'll add to Sam's in regards of appraisal is, I think it all boils down to who your real estate agent is. And if they know what the market is, and if they know the price that they're paying is something that the banks will value as well. I've dealt with so many out there, and again, it's the advice you get. It's the advice from the real estate side is what I would drop the ball on.
Yeah.
Sorry, Sam, I had to do that.
Thank you. Thank you, Bhavin. No, he's right. You know what? At some point, when I go with my clients in multiple offers, Prasunji, what I do is, and what our team does is, we set up a goal. And we say, okay, you know what? This is our goal. We are not going to go beyond this. We are not going to go crazy. If I say this house is worth, say, 875, it's listed for 825 or 850, and I say, okay, we'll not go more than 870 or 875. If someone else is buying for 900, maybe he's paying a little bit too much as of today. The only reason I also want to set up that bar is we never know when we stop growing. As per Kishore and Bhavin both are saying, the next comparables does matter, right? But if there is no next comparable equal to or more than your price in next month and a half, when the appraisal has to be done, then we could be in trouble. That's why I look into all the comparables before I say and set up a bar for my clients. So that when Kishore and Bhavin, I always call them before I put a multiple offer. And sometimes I call them like in almost middle of night. I say, hey, I'm going for an offer presentation right now with my client, and I need your advice. Would this client be okay? And
Yeah.
only question they ask me, and I'll tell you, they always ask me, do you think appraisal will come okay? They put that on me back, right? They always ask me this question: do you think appraisal will be okay? And I tell them the price I'm telling my client, the appraisal will be fine. They say, go ahead, don't worry, right? So that's, yes, it's a teamwork. We work like a team. We, touch wood, we have done all good work for all our clients, and we set up a realistic pricing goal. And most of the time we are able to get our properties for our clients. But if we lose one or two, I don't panic. I don't want to go into panic mode and pay too much more.
Definitely.
Sam, if
That makes sense.
I can pitch in. Bhavin mentioned the market dropped 1,000 points, but not so much with the real estate market. That's a fundamental difference between your stock market and real estate market, because stock market, as you know, the value changes every 5 seconds.
Yes.
Well, real estate doesn't. So imagine if your house value, it fluctuates every 5 seconds. How would that homeowner feel, right? They will be selling it after every hour if the market drops.
Yeah.
But the thing that I really appreciate about real estate is the power of leverage, where you can use 95% of the bank's money and pitch in your 5%, and you get the growth on entire 100%. Yes, obviously there's cost of doing business, which is your commission, your taxes. But hey, most of the time you end up making money if you're the right team.
Yep, perfect. Great. Any other question from any other participant?
Hi, Mamaji. I'll go ahead and ask a question. Seems a great presentation, and based on some of the things I've looked into past, because I've been doing some activity as well during this COVID sale period. I'd like to put in. It seems to me like condos are on a great sale right now for people who can hold to that property for maybe a year, a couple of years until everything opens, and then the rental has to go back. I've been working downtown from last 5 years, and I know the people I work with, they will pay more than half of their paycheck, or more than like they're willing to pay 60% of their paycheck, just they can live downtown, walk to work, and that's okay with them. They have no complaints by the end of the day. They don't want to commute, right? And so based on all of that, I feel like, but there's also a rush of people moving away from downtown, or moving away from uptown, midtown, and going to a lot more people going to Barrie, out of the GTA, but also people moving to GTA, right? And the prices are increasing. Do you think at the moment the way prices are increasing, is it a sustainable real estate market where we go in the market and we see during this time of the year when the prices should be dropping, right? If we compare year by year by year, the prices should be dropping towards December. What do you feel about that?
You know what? Thank you for asking this question. Abhinav, I know you have done a lot of analysis lately, because you have done a couple of transactions during COVID, right? And that gave you a lot of knowledge as well, because everybody, before we buy or sell properties, everybody does some own homework. And I should add, today's youngsters, that's what these millennials and Gen Z I was talking about, they do a lot of homework before they even come to us. They have all the tools in their hands. They can analyze this information sometimes even quicker than us, right? May not be better, but quicker, right? So yes, your analysis to some extent is very good. You mentioned that, and we had discussion as well, that normally this time of the year, the market should have dropped. This year, we have not appreciated, as I showed that quarterly slides, and I showed that second quarter, we was the lowest quarter. Replace the second quarter with third quarter, right? And the third quarter which we had should have been the second quarter. And the second quarter we had, add another 20% to that, that should be third quarter. So we are playing a catch-up game. So that's why the pricing did not drop, and would not drop consistently or significantly in the last quarter as well, because normally when we have such a high market, From that high market, we cannot go to a very low market right away. The sentiments take time to change. People who are buying today, as you know, a lot of houses are still selling in multiple offers. All those people who have lost multiple offers today, next house comes tomorrow, they'll be still going and bidding for them. So there, it means there is still that demand and supply is less. So overnight, we cannot replace demand and supply, right? So overnight, the prices will never go back to, say, from very high to again low, as well as the number of sales will not go down consistently or significantly in near future. So that's for the freehold market. Coming back to your second part of your question, to the condo market, yes, condo market is on sale. I'm already telling, as I said, this is a great opportunity for investor clients, or even for buyers who wanted to buy their condos, or even for people who wanted to sell their houses and move down to condos. There are many people in that boat who want to sell their houses now because of their lifestyle or because of their whatever situation is, and they want to move back to condos, right? For them, it's the best time as well, because now they can sell their house at the highest possible price, right? And then, I shouldn't say highest possible ever, but again, it's the highest price currently. And then they would be buying condos which are on a sale, right? For them, it's a win-win situation. So yes, everybody's situation is different depending on where you put yourself into this spectrum. You would find there are opportunities for everybody, especially for condo buyers. There are good opportunities. I love this opportunity. I can make a disclosure. I recently bought a condo myself in downtown, and my closing is coming up next week. So I just bought it during COVID as well. So it's not that I'm only teaching this. I practice what I preach, right? So I'm doing the same thing. I bought a condo personally. I also sold one property during COVID, but then again, I bought back because I personally feel that real estate investment is still the best investment.
Sam is Deepak here. Can I ask you a quick question in regards to the investment?
Sure, Deepak, go ahead, please.
So Sam, you made a good point about switching. If somebody wants to sell the house, they'd probably be taking advantage of selling at a higher price and buying a condo at a lowest price. I think it also matters where the condo is as well, I believe. I mean, I'm not an expert in the market. So I have a similar question. So I was wondering, if somebody who has a different approach, they wanted to move into a house, and this probably be not a good idea, as you mentioning so far, and listening to your previous conversation. So selling a condo is not a right idea at this time. And then somebody who wants to buy a house probably is not a good idea to buy a house because there are bids going on. So if somebody is in that situation, so what do you suggest to that particular client? Maybe use that money and buy another condo and stick around with that for a year or two, so that you can at least grow, and then take an action, either sell one of the condo and then buy a house in 1 year period.
Deepak, very good question, my friend. And I'm happy and glad that you brought up a very good example of buying second condo. Let me add to that. Now, it depends upon everybody's situation. Yes, pricing vary with location. In real estate, we always say number one factor is location. Right? Location always plays an important role. Condos, yes, they are on sale, but they are not on sale, similar sale. They're not on similar sale everywhere, right? Some buildings are still selling about the same price like pre-COVID, right? And some buildings maybe even a little bit higher. But most buildings overall in condos, because we can only take averages or overall, the overall condos are on sale.
Excuse me, Sam, can you say everyone to mute themselves because there is a background noise?
Yeah, please, everybody, if you don't mind muting, and then whosoever wants to ask a question, if you can unmute, that way we can concentrate better. I would really appreciate it. Thank you. So yes, Deepak, coming back to our topic. So as I said, the main if you are selling a condo and buying a house, if that is the need, I said once, I said twice, and I'm saying it third time, do not wait too long. You may not like it, what I'm saying again, Deepak.
Yeah, but I agree.
The reason I'm saying is it for sure that the house prices will come down? And is it for sure that these condos will go up at the same pace as the houses? No one knows. To some extent, I can even say that condos would also appreciate, houses will also appreciate. So both will appreciate. Condos may appreciate, sometimes condos appreciate better than houses, sometimes houses appreciate better than condos, right? There are cycles. In the last 3 years, condos have outpaced houses. Right now, houses are catching up. Have they reached their peak? No, they haven't reached their peak. So still there's a lot of room to go. That's why I was saying anybody who has to upgrade from a condo to a house, don't delay too much. It might be too late then actually, because once we cannot build more land, we cannot build more houses, especially in locations. That's where the location becomes more important as well. At this moment, there are still very, very good opportunities in houses as well, depending on what you're buying and where you're buying. I have successfully moved 2, 3, 4 clients in the last 2 months only from condos to houses, and they are very glad they did it. And I'm glad they did it. So depending upon the situation, where you want to sell and where you want to buy and what you want to buy, and whether it's only pure investment decision or it's your need. If someone's need is to buy a house for their own use, it's a no-brainer. Don't delay at all. It's an investment. Then we can sit down and analyze the situation, and we have to see where is the house you are planning to buy, where is the condo you're planning to buy or sell, and what should we do. So
Right.
you cannot have one size fits all, right? Every situation is completely different. That's why it's very important that we sit down together and we analyze and we establish a program specially suitable for your needs or that person's particular needs, so as to make the right decision.
Yes. No, thank you.
Thank you, Deepak. Anybody else? I think we are almost at the last couple of minutes for this session. We are about close to about an hour and a half. And again, thank you for great questions from great audience. And everybody has stayed that long and spent so much time, especially on a long weekend. I really appreciate everybody's time. So anybody have a last question, please come forward. And otherwise, you can always contact us and we would be happy to get all the answers for you at any point of time.
Thank you, Sam. It was a good presentation.
Thank you.
I would once again just advise everybody that they should be working on their estate planning will, which is very important. And if they need any help for creating a will kit, my office is actually helping everybody for creating a will kit, and that will kit can be taken to the lawyer and then create the will, which is very, very, very important. I mean, I can tell you the truth.
And I would definitely add to that point, very, very important to have a will, especially if you're having any investment properties. You don't want them to go through parole or whatever it's called when there's no will. It becomes very, very challenging. So wills are important, and updated wills are very, very important. So if you have done a will 10 years back or 15 years back or 5 years back, that's outdated. It may not hold or work. So yes, very important advice from Prasoon. So
Let me add that to Sam. So if you have a corporation, then you need two wills. You need a personal will and a will for the corporation, so that any assets you have in the corporation do not go through probate.
Yes. Perfect. You know what? With that, I need both of your help to set up my wills as well. I'll make a honest admission that I personally haven't updated my wills as well, but I'm in a process. As you know, I'm in touch with my advisors, both Prasoon and Mohit, in updating my wills as well. So I would advise the same to everybody. Please contact your financial advisors or contact Prasoon or Mohit, and please take advantage of this.
Thank you, Sam.
Great. Thank you, everybody. Thank you for your time. And again, I would really appreciate your any feedback or any concerns you have or any questions you have. Please email me, call me, or text me, or to Mac or to Neelam. Send us your questions and we will try to get the answers if we don't have it. So thank you for your time. Thank you for your availability today. And I hope everybody have a happy Thanksgiving and you enjoy your weekend. You enjoy your family on this Thanksgiving weekend. Bye for now.
Thank you, Sam.
Thank you, Sam.
everyone.
Thank you, everybody.